Enda Curran is Bloomberg's Chief Asia Economics Correspondent, and he joins us now from Hong Kong. Hello to you, Enda. There were predictions of a 10% fall today. Now, that didn't happen. What's your reading of this week's wild ride on China's main stock market?
It didn't happen, but we've had an abrupt end to a relative period of calm up here, Kristen. It kind of exposes an underlying fragility in China's economy and financial sector, and it shows that sentiment on China right now is still quite weak. You know, there isn't any particular trigger, I think, that people can point to for the latest sell-off in Shanghai, but we did have a soft reading on the economy at the end of last week, which was the PMI, or manufacturing gauge. And the reason that was important was because it's one of the first readings we have in the third quarter. And people expect the third quarter to be soft because of the correction in the stock market. So it's one of those indicators that go, look, things aren't as good as some people may have thought. There was a narrative that the economy was stabilising, but maybe it hasn't bottomed out after all.
So you do think this is just a correction?
Well, we don't know yet, because there's such a degree of government support still in the stock market. We don't quite know whether or not this is a correction that could find its own feet, or whether or not there's a free fall ahead, or would go into free fall, I should say, without further government support. The authorities have come out and said last night, the stocks regulator, and today the central bank, have reminded people that they are there and willing to provide support and liquidity if it's needed, to make sure that China's stock market has some support. So by all accounts, betting on the future direction is a tough call, but the sentiment, at least for now, suggests that further weakness ahead.
What kind of impact is this period of instability having on markets in Asia?
Well, look, China is obviously the world's second biggest economy, but the real growth engine for the Asia region. It sucks in especially commodities imports from around the region. So when the Chinese economy is slowing, it does impact other. I mean, look at South Korea, for example. Its biggest exports market is China. South Korea is hurting directly because of China's slowdown. Ditto Australia. But how the stock market's playing out, we don't quite know yet, because obviously the stock market in China is contained within China, and relatively contained and quite controlled. And of course, the overall size of the investor base is small relative to the population, but there's no doubt that it's a negative, and it's another negative to an already slowing China story. The economy is slowing, and it's growing at its slowest in 25 years. So it doesn't suggest that things have turned around just yet.
Is it fair to say that most commentators are reading the tea leaves on this one? Does anyone really know what's going on with the stock market in China at the moment? Well,
it's confusing, Kristen, because if you look at the array of measures that the authorities have unleashed to support stocks, they've put a ban on a moratorium on IPOs, they have encouraged, they've set up a liquidity fund to encourage buying of assets. The central bank, of course, along the way has cut interest rates, and they've taken steps to boost margin trading. So no one quite knows what the full picture of, or the full natural degree of support is for stocks right now, because if all that was withdrawn overnight, where would stocks end up? So it's a confused picture. I think it's a negative picture, and no one's quite willing to put their money on the table and call a bottom just yet.
Well, it's terrific to get that update from you, Enda Curran in Hong Kong. Thank you for speaking to ABC News 24.